we're just seeing the tip of the iceberg. This is a contagion that's happening across all the regional banks, and it's going to happen one by one by one.
As this banking crisis unfolds, investors really want to know how to protect their wealth and where to invest to either avoid a crash or to capitalize on what's about to happen. We're here to examine these themes and which asset classes and crypto in particular will benefit with Ron Neuner. He is a founder of Crypto Banter. Ron, great channel you've got. Thanks for being on my channel, The David Lin Report. Pleasure hosting you today.
David, I must say, I'm super proud of you for what you've done with your channel in such a short period of time. I've been watching it as one of the best success stories on YouTube, and it's an honor to be here. Honored to be here with you as one of the early guests.
Honor to host you. I wouldn't call myself a success story yet. I just started, but your channel is a success story, and I like to talk about media with you towards the end of the interview because that is a very important topic for not just you and me, but for everybody. But first, let's talk about current news and investing. Now, you recently put out a video on your channel, and I'm paraphrasing the title. We'll put a link in the description. People can check it out. But you were comparing Fed action with JP Morgan, and perhaps there's some collusion going on between JP Morgan and the Federal Reserve when it comes to bank buyouts. I'll let you elaborate on what you found.
Well, I don't know if it's exactly collusion. I was using that from an article that was written by Balaji, who's a very famous commentator in the crypto space. But yesterday we had the FOMC meeting, and in the FOMC meeting, one of the things that I was listening out for is whether Powell would acknowledge the banking collapse, and he did. But it's not the acknowledgement that I was actually expecting. He started off his press conference by saying, first of all, let me comment on the banking crisis that apparently is not happening in the United States.
Discussing today's meeting, let me comment briefly on recent developments in the banking sector. Conditions in that sector have broadly improved since early March, and the U.S. banking system is sound and resilient.
And basically palmed off the fact that there was no bank crisis happening in the United States. About 2 hours after he finished his press conference, shares of Pacific West crashed. And today I've been watching the regional banking sector, Western Alliance et al. And I don't know, I think he's very, very, very disconnected if he thinks there's no banking crisis specifically in the regional banks in the United States. Now, what's happening in this banking crisis is that you're getting the FDIC working together with the bigger banks to bail out the small banks that are collapsing, which is it's a crazy situation when you're getting. I mean, if you look at the last the last one that went down, and you look at how the buyout happened with JP Morgan, it was a buyout that was effectively subsidized by the FDIC. So JP Morgan lands up buying a bank half subsidized by the FDIC. And so what you're getting is the big banks becoming stronger, and you're getting the strong banks collapsing, and depositors are being made whole, but the people that are losing are the equity holders. And that just sounds like a crazy situation, which is potentially unsustainable.
Do you think big banks are a good investment right now, precisely because of the reasons you just stated?
Well, I think we're in the beginning of a cycle where big banks may actually be a good investment. But that said, this contagion could spread pretty quickly. Remember that the cause of this banking collapse is the fact that there was no interest on T-bills for a long time. And so banks started to buy longer term T-bills, searching for higher interest rates. And when investors realized this and started to ask for their money, there was a duration mismatch. Now, the smaller banks are going to be the ones to collapse first, but I think that all banks are in the same position. I think a lot of banks reached out or bought longer dated T-bills, and that was all fun and games when there was no interest rates. But now at interest rates of 5%, I think it becomes a minefield. And so right now, to be honest, banking is not anywhere. I wouldn't be playing in the banking sector at all. I think it's a minefield.
The thing is, let me just perhaps offer a counter viewpoint, is that the banking failures that we're seeing now, it's because exactly like you say, duration mismatch from mismanaging the loan books from last quarter and perhaps before that. It's from actions that have already taken place. Now, the Federal Reserve, some say, have reached the end of the rate hike cycle, and so interest rates aren't going to get much higher for the banks. And so whatever they have now, if they're still able to manage the books now, it's not going to get worse for them, right? Do you agree or disagree?
I think I disagree, and I'll tell you why I think I disagree. Because you remember that the durations that the banks were buying were not 6 months different in durations. They were buying longer dated T-bills because the only place you could get returns was 10-year T-bills. That's like, you're talking about 5 and 10-year T-bills where you were getting returns. There were no returns or no significant differences in returns between the 0, 6 month, 12-month returns back in the day when there were no interest rates. And so I think for as long as people don't ask for their money back, you don't have a problem. But as soon as people start smelling a problem, then you start having a mini run on the banks, or as one of my guests called it, a bank walk. Now, the only difference between the bank run and the bank walk is the fact that the FDIC is insuring deposits, and the fact that Yellen and effectively Powell have come out and said depositors won't lose their money. If we get one situation where depositors actually start to lose their money, then the whole house of cards starts to collapse. Because right now there's no bank runs, because the FDIC and the Fed and Yellen have basically said in a roundabout way, because they didn't say it very directly, but they said depositors won't lose their money. So the only people that are at risk are equity holders. But there is going to come a point where eventually we're going to go, hold on a second, these banks are all collapsing. At some point, we can't keep backstopping the depositors because of the mismatch. The mismatch is a real thing. Like, I know people say, oh, well, you'll just hold the bond or the bill until maturity. Maturity is 10 years away. People want their money now. Right now, that same T-bill is worth 10 or 20% less. So you're taking $1 billion T-bill, that's worth $800 million. There's a $200 million gap. Someone has to fill that gap. The FDIC can't fill that gap. It doesn't have enough money to fill that gap if it starts happening on a mass scale. I've seen multiple statistics that show that the FDIC couldn't handle a banking collapse, or couldn't handle even many more banks collapsing. So I don't know, banking just sounds like a minefield to me. And I think, I mean, not to segue the discussion too quickly into Bitcoin, but that is the reason why we saw Bitcoin going up. If you look at the day that Bitcoin actually started going up, Bitcoin started going up. It was at 19,000 and change. And then Silicon Valley Bank collapsed. It was at Friday. And I remember going onto a Spaces on Twitter and saying to the guys in the Spaces, guys, I've seen this movie before. Go and get yourself some Bitcoin. And then by Monday morning, Bitcoin was at 22,000. Because I've seen this before. People were running away from the banks to get their money into sound money because they didn't know the extent of the banking collapse. Yesterday, Powell denied that there is a problem with the banks again. And 2 hours later, we saw the regional banking index pretty much. I mean, I've been watching it all day today, and it's been going down and down and down. You can't tell me there's not a problem with the banks.
I mean, okay, just in the depositors, SVB had mostly tech, and then First Republic, a high concentration of wealthy depositors. But yes, you're right. As soon as the masses start to lose their deposits, or there's a high risk of that, it's, house of cards. It's going to fall down.
What about What about First Republic? Nothing to do with tech, nothing to do with crypto, just a regional bank. What about PacWest? I mean, PacWest is one of the biggest banks in California. It's not, you can't say it's a tech bank. I'm reading now on my screen, Western Alliance, a regional bank with $71 billion in assets reported by FNT that is exploring a potential sale as it becomes the latest U.S. regional bank to seek a lifeline. I mean, we're just seeing the tip of the iceberg. This is a contagion that's happening across all the regional banks, and it's going to happen one by one by one.
I do want to talk about Bitcoin, but I just want to understand this contagion a little bit. Why? This is a very simple and basic question, but why is this contagion happening? Surely all the banks don't have a mismatched duration on their books. Are you telling me every single bank mismanaged their loan portfolio? I mean, there must be a problem. There must be a bigger issue at play here.
Well, I think to an extent, every single bank mismanaged their loan portfolio because it was the only place that you could get yield. You're talking about a zero interest rate environment. We were effectively in a zero interest rate environment. You could not get yield unless you went really, really, really far down the yield curve. So that's the first thing. Now, the cracks start to show first in the regional banks because the big banks have got they got so much more firepower that they almost seem immune. And that's why we're seeing the smaller banks. By the way, they're not small banks. You're talking about the 15th biggest bank in the US, the 16th biggest bank in the US. They're not small banks. They're just smaller banks. And look, I'm not saying that the entire banking system is going to collapse, but I do think we're going to get a complete rejigging or reshuffle where the big banks are going to become stronger and the small banks are going to become weaker. But to me right now, banking is radioactive. Stay away from it.
What does this mean for DeFi? We're going to come back to Bitcoin, but what does this mean for DeFi? Is this an opportunity for people to really expand into the DeFi sector when it comes to either deposits of wealth or investing in cryptocurrencies, or are people just wary of investments overall and staying away from everything? I
wish I could say that it would be good for DeFi, but unfortunately, DeFi is not ready to absorb the rush. It's not regulated enough. It's not safe enough, and it's not easy enough to use for the individual user, unfortunately. If you would have asked me the same question about Bitcoin in 2016 and 2017, I would have said to you that I would have given you the same answer. I would have said, look, I really do believe that Bitcoin is a hedge against inflation and a hedge against government irresponsibility and a hedge against potential banking collapse and currency collapses. But at the time, Bitcoin wasn't ready for adoption. I can say now that Bitcoin is probably just at the beginning of being ready for mass adoption. So when I say mass adoption, I mean when institutions and pension funds and everyone else can start investing in it. I can easily see big funds now being able to transfer big portions of their net asset values into Bitcoin. But I can't see them using DeFi yet. DeFi is a minefield. It's almost unusable, even for people like me who really, really, really understand crypto. It's just too complicated. It's just not safe enough. So I think
it's not safe enough.
Maybe DeFi is not safe.
Sorry, why is it not safe enough? Is it? I mean, it's decentralized. Why is it not safe?
Because we're still learning about how DeFi works. And every now and then, what you get a contract exploit, which is when a hacker finds an exploit in the contract. Now, in order for the DeFi to become bulletproof, what we need to go through a cycle where we get hacked and hacked and hacked. And every time we get hacked, remember, it's like you see your vulnerability and you go, well, I didn't really think that you could be hacked like this, but now we've learned a new way to hack, and you patch up those things. If you think about banking has had hundreds of years to patch up all their vulnerabilities. Banking today is not what banking was many years ago. Today there's cameras inside ATMs. Many years ago they weren't, but then we realized that there was this hack where people could exploit not having cameras in ATMs. DeFi has to mature. It's too early, which is why the returns are super normal in DeFi. It'll take time for it to mature, but DeFi is not ready for mass adoption. Bitcoin very, very, very much is ready for mass adoption now. And I'd say that in the first time in Bitcoin's history, I would be confident enough to say, to give you a statement like that, which I wouldn't have been able to do in the previous cycle. I would have said, look, it's too hard for people to store Bitcoin. There's not enough custodians, and there's not enough wallets. There's not enough merchants that accept it. But now I think that cycle has changed. And I think that Bitcoin is ready for mass adoption. And when I say mass adoption, I mean institutional adoption. And I think that DeFi, unfortunately, not yet.
So yeah, Bitcoin ready for mass adoption. Question is why? Why is it ready for mass adoption? Why now?
Okay, so Bitcoin has been battle tested for about 12 years or 13 years. Bitcoin has had an infrastructure built around it for 12 or 13 years. Like, depends on when you want to count from, but the network has been tested, secured for 12 years. People have been building wallets, custodians, interfaces with banks, et cetera, for the last 12 years. People have battle tested it, but the Bitcoin network hasn't crashed, hasn't gone down. We've had governments testing it by moving hash rate out of China, back in, back out again. And Bitcoin has survived all of this. And so reasonably confident, you could stand up in front of a board of trustees or a board of investors, and you could say, we invested in Bitcoin, and you can put your hand on your heart and say, we did this, and it meets all of our risk criteria, and we believe responsibly that we can invest real chunks of money into Bitcoin. You can't say that about DeFi yet. You just can't. And so I think that DeFi will be the next cycle, but it's not this cycle. I think this cycle is the Bitcoin cycle. And actually, what you can see if you look at Bitcoin, you see the price of Bitcoin going up. And if you give me a second, I'll just share my screen here with you, and I'll show
While
you.
you're pulling that up, I do want to talk about Bitcoin's price correlation with several other assets, stocks, gold. And as we're speaking today on Thursday, it was interesting how Bitcoin moved, because we'll talk about that. But Bitcoin's up today on Thursday. We're speaking on Thursday. And midday, Bitcoin's up almost 1%. Stocks are down. S&P 500 is down 0.7%. Gold is up about 0.9%. So Bitcoin is moving exactly with gold today and not with stocks. I find that very interesting. It typically doesn't do that.
Okay, so this is you can see this is the Bitcoin chart. And one thing you'll realize is that Bitcoin started going up from around here, from about 19,000. And I think that this, if you correlate that back, that was a Silicon Valley collapse somewhere around March 6th or somewhere around there. What you can also see, if you go to the Bitcoin dominance chart, now the Bitcoin dominance chart shows you the market share that Bitcoin has of the total crypto market. Let me just clean up the chart a little bit. I've been obviously working on these charts. What you can see is that Bitcoin's market dominance is at a very, very, very critical point. You can see that it's at about 48.45 or almost 49. Now that shows you that from the lows where people were investing in other crypto, where the market dominance was at around 38%, we're now back at 49%. That means that people are investing in Bitcoin right now, and they're not investing in other cryptos. It's a Bitcoin run. It's not an altcoin run. And that exactly corresponds with my theory here. My theory here says that people are investing in Bitcoin as an alternative because A, it's a great alternative to money and to government irresponsibility, and to where they used to run into gold, they're now running into gold and also a little bit into Bitcoin. I think that probably takes us into the correlation discussion. I've been watching the correlation. If you let me share my screen again, I'll show you the correlation charts that I've been looking at. So here is the correlation between Bitcoin and the banking stocks. So here's Bitcoin going up. Here are the banking stocks going straight down. That's a slightly longer term view on it. I don't have the chart in front of me, but the other chart is, if you look at what made an all-time high yesterday, it was gold. And so what you're seeing is Bitcoin is starting to track gold, starting to be much more correlated to gold than it was to the NASDAQ and to all the other risk-on assets. And so I think that what people are seeing Bitcoin as now is a viable alternative to gold, where gold acts as a safe haven and a protection against government irresponsibility, so to speak.
Interesting. So you think Bitcoin's decorrelation with stocks could happen sometime this year and act more as a safe haven?
I really believe that this is Bitcoin's time to shine. If you think about the time when Bitcoin was created, that was the 2008 financial crisis. That was when Bitcoin was created. That was when the white paper was published by Satoshi. And I think that it takes a long time to actually build technology and build the infrastructure around technology, and specifically when it's a technology that's redefining value and money. And I think the next banking financial crisis, which I think is rolling out in front of us, I may be wrong. Hey, maybe Powell is right, but I don't think so. I think that it's had 10, 11, 12 years, 13 years, whatever the number is, to build the infrastructure around it. And I think that it hasn't been ready up until now, but now it's ready to have its moment. And I think that this might be the moment. I'm a real Bitcoin bull. And sometimes what I do is I try and look at the other side of the coin. I try and sit up at night and go, what if I'm not seeing it? What is the other side of this? What are the naysayers saying about it? And I just can't convince myself that Bitcoin is not a better version of gold. I just can't. It really has all those properties. So I think it will have its moment now. The other thing is, I'm a big believer in network effects. So it's just some history, Dave. Before I built Crypto Banter, I built and sold the biggest marketing company in Africa. And the reason why I sold the business for over $100 million. And I did this at the peak of the business. We were growing fast. We were the blue-eyed boys of the marketing industry. We were doing so well. And I decided to sell. And the reason why I decided to sell was because in my personal life, I was tired of running a linear business. And I wanted to run an exponential business. And so I spent about 2 years studying exponential technology, and I realized that the one effect that is the most important effect in any kind of exponential business, be it Uber, Amazon, Google, or anything else, is what they call network effects. Now, network effects is when every additional user to the network adds value to the network exponentially. And Bitcoin has those network effects. And when an asset or a technology has network effects, there's only three things that can stop it. The first thing is government intervention. The second thing is a breakdown of technology for a very long period of time. And the third thing is a 10 times better competitor. And right now, none of those exist for Bitcoin, even though some governments are trying to stop it or to slow it down. None of those exist for Bitcoin. So for me, it is the perfect asset at the moment, geared with network effect and ready to take off. And so it's, for me, the safest bet and probably the safest bet in crypto.
You don't think stablecoins are a worthy competitor to Bitcoin?
Stablecoins, as we have them today, are just dollars backed. They just tokens backed by money on the blockchain. And I think they serve a very, very good use case. But the use case of a stablecoin is merely a bridge from the old financial system to the new financial system. It's just a temporary measure where fund managers and people become used to dropping the idea of the dollar and adopting the idea of another monetary system. And so in that in-between period, you want to trade your normal dollars digitally because it makes you feel comfortable that you're trading digitally. But real crypto people actually don't trade against US dollars. They trade against Bitcoin because they're owning the currency of the future and they're abandoning the currency of the past.
I'll give you an example. So I was speaking to the CoinPayments CEO. So CoinPayments is a crypto gateway vendor, and they facilitate transactions between merchants to merchants using cryptocurrencies. And a few years ago, Bitcoin was a dominant coin on their platform for transactions. And now that's fallen. It was 80% of total transaction volume. Now they tell me it's somewhere around 30%. And I bring up stablecoins because stablecoins is now the dominant medium of exchange on their platform between merchants. And I can understand why. People want a stable, non-volatile medium of exchange to just trade with, right? So that's where I was coming from.
What about Venezuela? What about Argentina? What about Zimbabwe? What about all those countries? Do you think that they want to trade in their stablecoins? No. They want to trade in the US stablecoin. And if something starts happening to the US currency, where are we going to run to? We're going to run to a new kind of financial system. And so why are people running to gold? Why are people exiting the US dollar and going into gold? Why? Because they believe that they don't want to be trading in the US dollar, but what they're doing is they're going backwards instead of going forwards. They're saying, we'll put our money into the safe haven. What's a safe haven? It's the same safe haven that humans have used for the last 2,000 years. It's gold rocks that they found underground. It's great to sit in the US and in Canada and in sophisticated financial markets and to say that you're trading in stable coins. But I live in Africa and I know that our version of a stable coin is not that stable. You know, people in Turkey, their version of the stable coin is not that stable. Argentina, and these are big populations in the world. And so, as I said, I do think that right now stablecoins is the biggest use case in crypto. That's undisputed. But what it's doing is it's teaching people how to use blockchain technology to transfer old money because they feel comfortable transferring old money. And that's why we celebrate that, because we're teaching people to use our technology in a form that they understand. But over time, those people become Bitcoin bulls and they start to hold their wealth in Bitcoin. And that means that they're not holding their wealth in US dollars anymore. And you can see it. You can see anyone that joins crypto, you ask them, what is the biggest coin in your holding? It's always Bitcoin. You know, they don't say, oh, USDC.
Yeah. The other question people have is, how do I adopt Bitcoin? Where do I buy it? Where do I on-ramp? And this brings me back to the topic of exchanges. I would assume that during the banking failures over the last month and a half, that exchanges would do superbly well. And maybe some of them have in terms of inflows. I don't know. I'll let you comment on that. But I'm just looking at the Coinbase chart. The stock, it's currently at $49 on the NASDAQ. It was at $67 or $68. during the April highs. That's a fall of 27%. Why did Coinbase not benefit from these bank failures, or was it just a specific company incident that made Coinbase go down? But I'm just curious as to why exchanges like Coinbase didn't go up while banks were failing.
So Coinbase has its own set of issues, its own set of headwinds. Until yesterday, they were operating solely as a US domiciled exchange. And you know that right now the US doesn't have the most favorable environment for crypto. It's not the most favorable environment for crypto. The Coinbase is very publicly in a lawsuit with the SEC and potentially in multiple lawsuits soon with the SEC. And so I think that Coinbase has been what's the word? It's facing huge headwinds. And I don't know if you saw this, but there was an announcement actually yesterday that they said there was an announcement a couple of weeks ago that they registered a Bohemian company. And there was an announcement yesterday that they're launching a new derivatives exchange to service all other countries, all legal countries except the US. So I think that will bode well for Coinbase. But remember, Coinbase is dealing with a lot of headwinds. Coinbase has great investors, but Coinbase is going in for a hell of a fight. And they're the best people in the world to take on that fight. But rest assured that in that fight, they're going to be casualties because they're going into a fight with the SEC. And as we know, the SEC has unlimited money and to make this happen. And they're not going to stop because we know that Gary Gensler is on the warpath with crypto. So I think that's one of the problems that Coinbase has got. I mean, I do want to point out to you that if you look at the lows of Coinbase were, I think, around 33 or $34. I don't remember the exact number. But it is much higher than it was back then. And also Coinbase is being treated very much as a tech company. I think the lows were 31.9, and it's trading at $50 today. So I don't think it's such a bad performance.
And just in the note of the SEC suing Coinbase, and we've seen the response to the Wells letter by Brian Armstrong and Grewal, the chief legal officer. The question that people have been asking themselves in the crypto communities is why they've been sued. I mean, what I've heard is that Coinbase is probably the number one exchange in terms of complying with regulations because it is publicly listed. And, you know, of all the exchanges they could crack down on, why Coinbase? What is the SEC trying to prove?
The SEC cracked down on actually all American exchanges. Before they cracked down on Coinbase, they cracked down on an exchange called Kraken. And Kraken surrendered, paid the SEC $30 million and closed down their staking services. That happened not so long ago. Today, as we stand, there's not one regulated crypto derivatives exchange in the United States. Not a single crypto exchange in the world has the license to operate in the United States. The SEC has been taking on all exchanges. The Coinbase is the only one that is big enough and well-funded enough to fight back. And so now what we're witnessing is we're witnessing the fight. When the SEC went for Kraken just tapped out and paid the fine and moved on and just basically surrendered, realizing that if they were to take the fight, they were going to get crushed. Coinbase is a different beast. And I mean, I've been following Coinbase since 2016. And these guys have played by the rules to the detriment of the growth of their business. So, like, I've watched Brian Armstrong build Coinbase. He's always done it the right way, even if it's meant making less money for shareholders in the short term. He's always maintained that he wants to be the most regulated, cleanest shop, most compliant shop around. If you look at Coinbase and you look at Binance was actually started after Coinbase. Binance is much bigger than Coinbase. Why? Because they didn't operate exactly by the rules of the United States. They domiciled themselves outside the United States, and that led them to a much faster growth path. Now you're dealing with Coinbase being attacked. And again, their growth is being slowed down. But I think they sent a very, very, very good signal to the SEC and to the United States saying, you know what? If you don't want us here, we're going to start moving out. And we're going to open a derivatives exchange and we're going to start service. We also want to make money out of derivatives. And if you won't let us make money out of derivatives in the United States, we're going to leave and we're going to service the rest of the world. And that's just where we're at. We try to play nice. We tried to be compliant. We tried to meet the SEC multiple times. The SEC wouldn't give us guidance. The SEC wouldn't meet this. The SEC, Coinbase wanted to launch a lending platform, a lending program, which would allow users to deposit their Bitcoin and Ethereum and to withdraw money against it. So if you have a Bitcoin that's worth $30,000, you could give them the Bitcoin and you could borrow $15,000 against that. Now, the benefit of that is that you don't have to take the tax implications because you're not selling your Bitcoin. So you keep the upside of the Bitcoin and you can borrow against it to buy whatever you want. The SEC went to Coinbase. Coinbase went to the SEC to get guidance. And the SEC threatened to sue them. Okay, that's absolutely crazy. And as a result, Coinbase doesn't have a lending business. So the SEC is on a warpath with crypto, and Coinbase is the biggest fighter in the business, and therefore it's gonna just have these headwinds.
How do you think this lawsuit's going to play out?
I think it gets dragged out for many, many years because that's how lawsuits get dragged out. I think eventually it gets settled. And I think in the settlement, there are no winners and no losers. In other words, it lands up being a compromise. And hopefully, and I probably think that it gets settled at a time when Gary Gensler is already out of the SEC. We're seeing a very similar case. We're seeing the case of Ripple against the SEC. Now, the case of Ripple against the SEC was started by the previous chair. It was Jay Clayton who started the case of Ripple against the SEC. And he did that, I think, days before he left, or before he left the SEC. And so I think the same thing happens. I think Gary Gensler starts this lawsuit, but I think it's the guy that replaces him or the girl that replaces him that gets to finish the case, and they do it with less passion and probably different ideals. And that's just what it is.
Do you think that all these lawsuits, regardless of how they play out, all these lawsuits against exchanges will provide a headwind to on-ramp because people, the regular person, is going to look at the news and say, hey, I don't feel safe putting my money in Coinbase or Binance, whatever the case may be, because I don't know what the regulators are going to do, right?
We call this Operation Chokepoint. So Operation Chokepoint refers to the US choking the amount of money that comes onto the crypto ecosystem. It's like there are certain industries that the US doesn't really like. And what they do is they choke the amount of money that is able to come onto these on-ramps and off-ramps. So like there were 3 crypto-friendly banks, Silicon Valley Bank, Signature Bank, and one of the other ones like Silvergate Bank, which collapsed. All 3 of them collapsed in the same week. You want to tell me that's coincidence? Good luck to you. I don't believe it. That's certainly not coincidence. There is an operation going on now to choke crypto. You can't make it illegal because constitutionally you can't make crypto illegal. There's just no way you can do it. But you can put so many rules in it that it feels so uncomfortable for the ordinary person to be operating there that it's actually not fun anymore. And that's kind of what's going on at the moment, is we're being choked by the regulatory authorities in the United States, and they're making crypto a minefield, which is not actually fun to navigate.
I have heard that theory before. Is that? Can you comment on some of the evidence that we've seen that can suggest that the government's doing this on purpose, not just a coincidence?
I mean, you're getting all this enforcement action by the SEC. Number one, you are getting the crypto-friendly banks being shut down. I mean, the 3 biggest on-ramps and off-ramps to crypto in the United States being shut down, have been shut down. You're getting senators, Democrat senators calling for banning of crypto, et cetera, Elizabeth Warren, plus. I mean, it's not a formal thing, but it's certainly not the same tone that Joe Biden had when he published his executive order, which said that they wanted to regulate crypto in such a way that the US maintains its leadership in the space. Now, there was a report done by Andreessen Horowitz, and in the report done by Andreessen Horowitz, it showed that developers are actually leaving the US and going to operate in other domiciles to launch their crypto projects. And that's quite sad because it would mean that the US is losing its stronghold in this new technology because of what's happening. Now, you got to ask yourself a question. Does the US actually care? So yes, as crypto people, we want to believe that the US actually cares about this. But hey, maybe the US doesn't really care about the stronghold in blockchain as much as it means a lot to us. Maybe the US doesn't care. Maybe they're saying, look, as long as we maintain our stronghold in AI, and in other technologies that are booming at the moment, electric vehicles, AI, etc. That's good for us, and we're willing to not participate in this crypto revolution, because if you think about what crypto allows people to do, is it takes the power away from the governments, because when you take finance away from governments, you take away their only power. And they know that. They know that if you want to transfer money, crypto allows you to transfer massive amounts of money to a complete stranger without any KYC within a matter of seconds. Now, you don't think governments are going to enjoy that. You don't think governments are going to be for that. Crypto allows you to earn money peer-to-peer without centralized intermediaries, which are controlled by governments and pay lots of taxes to governments in the middle. Governments don't enjoy that. I mean, so I'm not sure. Like, I know the crypto bros will tell you, the US is going to lose its foothold in crypto, but I don't know if inside the government it's such a big priority for them to say, we must be the number one blockchain nation in the world. The reality is that the other technologies which are much more promising right now, like AI, for example, which, unlike crypto, there's no rug pulls, there's no scams, there's no bad contract audits, there's no ability to move large amounts of money and potentially fund terrorist organizations or evade tax or avoid sanctions. To the US, certainly that would probably be a much more that would certainly be a technology that if I was sitting in the US government, I would rather back that technology and kind of say, look, we don't really need to win in this crypto thing, because AI is actually much more interesting.
I mean, it's not that crypto was rug pulling people or were scammy people. It's the people behind certain projects that were using it as a tool to scam people and rug pull people, right? AI is a tool. Ultimately, can we see people scamming people with AI? Yeah, I think that's possible.
No, but crypto is the transfer. By definition, it's a transfer of large amounts of money without centralized intermediaries anywhere in the world, whenever you want. I mean, that's like here's the money, take it. You know what I mean? And AI is not like that. And again, I think AI comes with its own set of problems. I'm just contrasting it and saying, look, I know what crypto bros are thinking. How can it be that the US doesn't want blockchain? But I don't think that for the US regulators, it's such a big thing. We do have a lot of Congress people on our side, but I don't think it's like such a big issue, if you know what I'm saying.
Just going back to Chokepoint, and we'll end it on regulation here. What we saw last year after the collapse of Luna and FTX was a lot of people asking, where were the regulators? Why weren't these things regulated? And, how did this happen? Perhaps what we're seeing now is just a response to that.
Where were the regulators with FTX? The exchanges were begging the SEC for guidance. The SEC wasn't giving them guidance. As a result, many Americans lost a lot of money on FTX. Where were the regulators? Where were the regulators in 2017 with all the ICO scams?
Well, that's what I'm saying. Maybe they're making up for lost time now, and they're cracking down super hard, right? Because they're going overboard now. If you want to use that word, overboard, I don't know.
Yeah, maybe. But let me throw something else at you. Let me ask you a question, David. Would you ever lecture something that you weren't passionate about? Would you ever develop a MIT standard course for something that you weren't passionate about? Be honest. Like, could you see yourself waking up every day and lecturing a course on how to take the wool off sheep? I don't know, something completely random that you have zero passion about. You couldn't do that, right?
Yeah, I see your point. Yeah.
Gary Gensler was an MIT lecturer for blockchain technology. You want to tell me that he wasn't passionate about blockchain technology? I mean, come on. Let's call a spade here. There's something bigger and something deeper going on. In his MIT lectures, of which, by the way, I've listened to over 9 hours of his MIT lectures, he is a super blockchain proponent. Super blockchain proponent. You want to tell me that all of a sudden, when he became the chair of the SEC, he realized that everything was in crypto was bad? No. There's an agenda. There's an agenda. It's coming from somewhere else. It's coming from the powers that be way behind, stronger. And he's got a mandate, and he is just fulfilling his mandate. You cannot tell me that somebody would develop a course about something that they were not passionate about. And if you're so passionate about it, why are you trying to kill it?
Wait, was that what they're trying to do? Kill it? Maybe they're just trying to regulate it. I don't know.
I don't know. Have you watched the Gary Gensler approach, making everything a security and then also making it impossible to register it as a security? It's unplayable. In his mind, everything is a security. When you go and ask him for the SEC's assistance, you can't get assistance. When you want to register, they say it's easy to register, but actually there's no way to register crypto things. This, by the way, is not my opinion. This is coming from people inside the SEC. Hester Peirce, who is a commissioner at the SEC, published multiple public dissents to this exact effect, saying, this is ridiculous. We're telling people to come in and register, but it's impossible to register. So, I mean, there's a much bigger agenda at play. I think that you and I won't know what the agenda is because, that's how politics works. There are a lot of puppets in the big game.
Speaking of FTX, what's going on with FTX right now? What's the play? Because a month ago, they recovered about $7 billion in assets. Their lawyer is deliberating between either shutting down, not shutting down, but going bankrupt completely or restarting it. It's like one of the two.
Well, I don't think it's one of the two. So I think bear in mind that the liquidator is earning, I don't know what the number is, but call it $25 to $30 million a month, maybe even more, $45 million a month. I actually did have the bills. I don't have the bills in front of me anymore. They're making $40 million a month winding this thing down. Now, it's in their best interest to just keep on keeping on and keep earning as many fees as possible. They may restart the exchange. They may. It's a possibility. They've spoken about it quite loosely. Can I ask you a question, Dave? With all the exchanges that are out there, if they started the FTX exchange again, would you deposit your money on the FTX exchange?
I was going to ask you the same thing.
It's dead. It's dead. No one's going to trade on the FTX exchange. There is
what if they rebrand it with a different name and they have new management now, they have a new CEO, whatever?
Would you put your money on that exchange, or would you rather put it on Coinbase or Binance?
I still wouldn't, but you and me, we've looked into this. But a lot of people who don't know, it's a new exchange. Maybe I'll try it.
Pass. No thanks. I'm not putting my money on TFTX. I mean, they could restart the exchange, maybe. Who would run it? Do we trust them? No, I think it's dead. And I think, there are some token holders, FTT token holders, which was the token of the FTX exchange, who are hopeful. But come on, guys, it's FTX is dead. The liquidator is going to take 7 to 10 years to resolve the liquidation claim. By the end of it, the $7 billion that we had is going to be worth $2 or $3 billion, and that will eventually get paid out.
Okay, now stay tuned for part 2, where we discuss the future of media and this crypto that went up over 1,000% since launching 2 weeks ago. What is it? Should we even care? Let's discuss and find out in part 2. Stay tuned.